What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market, because that is simply impossible to do. And hopefully you're still not straddling the fence and you are investing into appreciating assets. That also includes yourself. Things that are going up in value and not things that are going down, like cars that are depreciating assets. Do you know that Americans are buying brand new cars and having like a $700 to $1,000 car note? And also, they're predicting that about 3 million cars will be repossessed by the end of 2025. So it's not looking good. Neither is the stock market. It says here the Dow, S&P 500, NASDAQ wiped out gains in sharp reversal power, or in reversal lower as Nvidia slides. Nvidia, which reported gains in its earnings report, in its third quarter earnings report. It exceeded expectations. But I'm thinking Nvidia's earnings report is not what's affecting the stock market. So let's get into the news and see what else is going on, if there's anything else. So it says here, a U.S. stock rally faced an abrupt turnaround on Thursday as investors assessed blockbuster Nvidia earnings and rate cut hopes after the release of the long-awaited September jobs report. That's another thing. The rate cuts and the September jobs report. So the tech-heavy NASDAQ flipped and fell 0.9% after climbing as much as roughly 2.5% earlier in the session. Because yesterday, after closing, Nvidia stock after hours was up $9. I was thinking, okay, tomorrow, Nvidia, along with a lot of other stocks, are going to go up big time. Didn't happen. So the S&P 500 lost around 0.7%. As much as 1.8% in earlier trading. So the stock market was up when the market first opened, and then poof, just went away. And the Dow, which includes fewer tech stocks, dropped 0.5%. So Nvidia stock surged as much as 5% in the early trading before also turning negative after the chip maker delivered an earnings beat and issued a stronger than expected, which is the beautiful thing, revenue outlook for the fourth quarter. That's in the next 3 months, right? So CEO Jensen Huang said the demand for the company's Blackwell processors is off the charts, helping at least initially to ease concern that the recent cool down in AI-linked stocks signal a longer term slowdown. Meanwhile, Thursday morning September non-farm payrolls report from the Bureau of Labor Statistics show the U.S. economy added 119,000 jobs during the month, well above the modest gain of 51,000 expected. But the U.S. unemployment rate rose to 4.4%, up from 4.3% in August. Following the report, option traders were pricing in around 38% odds of a rate cut at the Fed's next meeting in December. Those odds were increased from Wednesday, but still reflected the emerging narrative of a Fed divided on its next move. The data marked the first major sign into the U.S. economy since the longest ever U.S. government shutdown. Minutes from the Fed's October meeting show policymakers have strongly differing views over whether a cooling labor market or stubborn inflation possess the greater risk to the economy. Elsewhere in earnings, Walmart raised its full-year forecast after it beat on profit and sales in the third quarter. Its shares jumped as investors assessed the big box retailer's report, seen as a window into the strength of the consumer heading into the holiday season. 'So, So that's interesting. So let's see what, the news is saying about the jobs report. I'm going to skim through this. It said unhelpful split verdict. September jobs report makes Fed next move unclear. A stronger than expected, albeit stale, September jobs report is muddying the picture on whether a split Federal Reserve will cut or hold interest rates steady at its next policy meeting. Yeah, I'm not going to read all of this because it already shows September bounced back with 119 jobs. I read that already, compared to 51,000 that was expected. I don't know. It's interesting how Nvidia gave a great earnings report. The stock was up after hours. Then it says traders, day traders, mind you, those people that bet against things, they can make a lot of money, like Michael Burry did in the past, and how he's betting $1 billion that Palantir at some point will crash, or there's an AI bubble. It doesn't mean that it's going to happen next month. It could happen in a year, because you can put these trades in as a day trader to go out for a year or 2 months. So it's interesting. So obviously the market knows something that I don't know, and I don't know what is the problem. Is there an AI bubble? Is there a jobs issue in the U.S.? I don't know, but the market knows something that I don't. So I'm taking heed to it. Either way, that's why cash is king. I will say this: when I first started investing in 2020, it's because I had money on hand. I had never invested into the stock market. I never had a brokerage account, never invested. I had a 401k at the time, so I guess I was investing, but I personally didn't control any money that I was contributing to the stock market personally and buying stocks until 2020. And I did so because I had cash on hand. So if there is at some point another reset or decline in the market, you should want to have some cash to buy the dip. Because some of these companies that will take a hit are still great companies, but because of the decline, the prices can get slashed by a third, it could be by half, who knows. And so if you have money, what history has shown us, every time there's been a reset, the market has always bounced back at some point. So you could double, triple your gains if you invest into the right companies, right? So again, yeah, the market knows something we don't. So if the market was up big time earlier in the day, that means someone took a lot of profits. They just wiped out the profits. They wiped out yesterday's earnings profits from Nvidia, and then they wiped out even more after the market opened because the stock was up. It was up big time. But again, yeah, you got to pay attention to the signs because they know something we don't. So, that's why I'm going to continue to dollar cost average into the market. I'm going to save. I'm staying out of debt. And you need to get out of debt, people. Get out of debt. Nvidia is currently down almost $4 currently. FTEC, and information technology. That means the tech stocks are taking a big hit right now because FTEC, ETF, is down almost $5. I don't know what VGT is down. VGT is Vanguard's information technology ETF. It's down $15. I can't believe this ETF is now $721. I remember when it was $500 and I thought $500 was too much. Wow. Let me see what their VOO. This is Vanguard's S&P 500 ETF. They're down $5. That stock, or that ETF is going for $603. But I have SPYM, and that's State Street's SPDR S&P 500. It's down 77 cents. And this, it has the exact same funds within it as Vanguard's VOO. Vanguard's VOO is worth $600 per ETF or per stock, and State Street $77. Same 500 companies within each. The same with VGT, Vanguard Information Technology ETF is worth $700. Fidelity's Information Technology ETF FTEC is $215. But yeah, these stocks are taking a big hit. Broadcom is down over $3. Tesla is down almost $2. Palantir is down almost $8. It's like, wow. The market's taking a big hit. And it's trimming down. I'm noticing that it's trimming down all of the gains. I remember when the S&P 500 was up almost 16%. And I remember reading last year that the S&P was only expected to bring back 10%. I remember reading that at the end of the year, to only expect 10% gains on the S&P 500 for this year. And I was like, I was okay with that. I was like, oh, that kind of sucks. And then the market was rallying. I was like, wow, what happened to the 10%? And then April happened. Then it bounced back. Everything started going up. I'm like, oh, shoot, well, the 10% thing must not be true. Now I beg to differ. Because now year to date, the S&P 500 is down to like 11.5%. So, yeah. I mean, I would take if it only brings back 10%, I would take the 10% because that is a gain. Yeah, that's it. Yeah, so get out of debt, people. You have to get out of debt. You have to get out of student loan debt. You have to get out of credit card debt. You have to get out of personal loan debt. You have to get out of car loan debt. Americans are in $1 trillion worth of debt, along with the government of the U.S. in $37 trillion worth of debt. Americans, 18 trillion. But the choice is yours. And the only way that you can get out of debt, at least average Americans, is by creating a budget. Create a budget so that you can have a plan in place to start getting rid of these things that are keeping you from investing into yourselves, into your future, into the stock market, into creating generational wealth. You have to get out of debt. And you do that by creating a budget. But you have to get sick and tired of being sick and tired at some point. If not, then just continue to do what you're doing, and you will continue to experience the results that you are having, and be okay with it. You shouldn't be complaining. You shouldn't be lashing out in public or social media. Well, I'm saying you shouldn't, but you can do what you want to do. Because I can't tell you what to do. But it's like insanity. It's like a self-fulfilling prophecy. You're not doing anything to better your situation, but you're always complaining. You're always causing a ruckus or scene. You're always carrying around a negative attitude when you have not made any changes on your end. You can't expect the world around you to change when you haven't changed. And I truly believe when you change, everything around you changes. So I'm going to end this video here. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all. Disclaimer, I'm not a financial advisor, nor am I pretending to be one. So please be advised, any and all information on my channel is for entertainment purposes only, and it's just me expressing my opinion. So please consult with a financial advisor before you invest any of your hard-earned money. All right, you guys, take care. Have a blessed day. Peace. Love ya.